Well, Cantor Fitzgerald is entering the U.S. municipal bond market. Joining us to talk about this latest move at the company is Shawn. He's Cantor's Chief Executive Officer. Shawn, great to have you here.
Thanks, Carol.
Now, you guys were in the muni bond market. It's been a while, though, since you've been a player. What changed and kind of what took you so long to get back into this market?
Well, we're evolving all our business lines, and as we look at the future, certainly there are going to be opportunities in the muni space that we didn't think were there a couple of years ago. So we're looking to be a full-service investment bank, and we're looking to service our client base, and with that, we have to be in the muni space.
What about that just kind of record amount of municipal bond issues that are expected to come onto the market as states and cities and municipalities really kind of struggle to finance?
It's going to continue. So when we look at the muni space, you're actually looking at it as being a credit market now a little bit as well. So before it used to be just everyone had fungible assets and munis were munis, and now it really goes down to credit and looking for alpha creation, and that's where we think we excel. So our customers are looking for us to be involved with them and help them understand the marketplace and to benefit from it.
All right, so you definitely want to serve your customers, but you guys are also in a business. I mean, how big a business do you think this ultimately will be for you guys?
I think we will be a top 10 to 12 player, in the next year or two, and then we'll see from there going forward.
Got to ask you about some of the transparency issues. You know, a lot of the questions that have been raised, and certainly coming off of Jefferson County, Alabama, and the problems there. I mean, do you feel like the muni bond market needs more transparency?
It seems like everything needs more transparency.
All right, but let's talk about them. I mean, do you feel like there are those some strategic problems in the muni bond market?
I think when we look at underwriting, when it's a pendulum and it swings both ways. So when the market gets hot and everyone wants to be involved, underwriting standards go down. And when you go the other way, underwriting standards become very difficult. Transparency becomes very good.
Right.
So that's where I think we are now, where people are looking at things more along the lines of, is this a good credit, as opposed to, okay, I'll buy them.
Right, because don't you think we need it more so than ever before, considering the backdrop? We had a guest on yesterday, John Shore, Director of State Fiscal Projects for Center on Budget and Policy. He talked about the state of the states being in a crisis and just the problems. So at this point, I mean, the market needs to be as transparent as it can be, correct?
Absolutely. When you're underwriting, the perception is most of the states are having real financial issues, and some may be in bankruptcy or close to it. So that being said, you need to have the transparency there to understand the investment.
All right, I want to also ask you a little bit about Build America bonds, as you know, put into effect with the president's stimulus program late last year. What's your forecast for growth in this market?
I think the whole debt market is going to continue to grow as people have to recap. And
no choice, right?
Absolutely. You're now in a scenario where people need money to refinance their old bad debt, and it's going to continue and go on and on. So if you look at a long-term cycle, the debt market will continue to have high issuance for the next 5 or 10 years.
So your forecast for growth in this market specifically, tremendous?
It's still going to be very strong.
It's still going to be very strong. Let me also ask you, because you guys are one of the 18 primary dealers that you trade U.S. government securities with the Federal Reserve Bank of New York. We had the Fed decision yesterday. You think the Fed's taking the right position, right stance when it comes to interest rates at this point?
I think the Fed's in a tough position. They need to continue to provide liquidity to a system that needs excess liquidity.
We don't have a choice.
Exactly. So they're going to pull out monetary policy in different ways. So when we look at Fed policy, we used to think, okay, are they raising interest rates or not, right? Are they raising Fed funds? Now it's, are they taking liquidity back from programs? The last piece of the puzzle will be raising Fed funds.
All right. Because, you know, Matt Miller and I were at a breakfast that you guys held, I think it was last fall. You guys are pretty sober about the outlook. Has anything changed?
We think we're realists.
Well, I mean, is it the troubles with cities? Is it the deficit? Is it a lot of everything that's out there?
I think when you look at leverage and you look at the deleveraging process, it doesn't happen over a year or two. It takes an extended period of time. So
how long?
It could be, it's multiple years from here, I think. Because the scenario that everything is good and rosy again in a short period of time, you still have cities and states in financial turmoil. You still have huge deficits that are being compounded around the world. And that's going to continue to happen. So until we change that, we've got issues.
I got 10 seconds. So the enthusiasm that has come back in some regard to the marketplace, is that misplaced in your view? Just quickly.
I think it's liquidity induced.
It's liquidity induced. All right. We're going to leave it on that one. Hey, Shawn, thank you so much.
Thank you.
Shawn Matthews, the CEO over at Cantor Fitzgerald.